Good evening, everybody. Sorry for the delay. The usual computer glitches. Had to reboot, get a fresh start. All right, so the session on breakouts is very appropriate for this type of market condition, or at least fits in well with what we're going to be studying. So as we can see, this market has absolutely no direction whatsoever. And it's been that way for over 2 to 3 weeks. And as you can see, every single day it's just absolutely flat. Goes up, down, but nowhere by the end of the day. Now, why is this relevant? Because this tells us what type of strategy you probably want to be using during these type of market conditions. Obviously, when you're in an uptrend, J-hook pattern uptrend, we know we want to be predominantly bullish. But when you see something like this, should we be bullish or should we be bearish? Now, the advantage of candlestick scanning is we can see which sectors or which stocks have the most strength as far as bullish and which have the most strength as far as bearish. So if you're sitting in a market condition like this, the strategy changes, because we should probably have some longs and probably some shorts in our trading portfolio. Which areas do we go long or short? Well, as we can see in the NASDAQ, they haven't been able to bring the NASDAQ back up above the T-line. We can see the next pattern setting up. We have inverted hammers on all three indices on the 4-hour charts. Would the inverted hammer apply it the same as if it were the daily chart? No. Because as soon as the day ends, remember what a candlestick chart illustrates. It's telling you what the investor sentiment is doing right at that time. I'll get to that here in a second, Kevin. So as soon as the day closes, investor sentiment is done for the day. And it may be completely different 14 hours later when the market opens up again. So once your daily chart closes, anything intraday is now irrelevant. You want to go back to what the daily chart is telling you. Oh boy, Kevin, I think we probably have, are there some, I know we have some people coming in from the market technicians group, CMT. If you're new here, just say I'm new, hello, and that way I know how much to go into detail. However, the T-line is not a proprietary indicator. It's just a well-observed indicator as a candlestick investor. Because here's the basic analysis of candlesticks. They are the graphic depiction of everybody buying and selling during a specific time frame. Now I forgot what I was saying because I was reading Robert's question. Oh, so they basically tell you what's going on in investor sentiment. The T-line is the 8 exponential moving average. It's the trigger line or the trade line. And it has very strong statistical probability factors, which is if you see a candlestick buy signal and a close above the T-line, you stay long until you see a candlestick sell signal and a close back below the T-line. If you see a candlestick sell signal and a close below the T-line, you stay short until you see a candlestick buy signal and a close back up above the T-line. Now the caveat to that is the further away you move from the T-line, the higher the probability it's going to come back and test it, whether you're in the overbought area or oversold area. So the combination of graphics of candlestick signals and patterns, what the Japanese race traders spent 400 years of not only identifying the signals and patterns, but also telling us what the investor sentiment was that created those signals and patterns, which once you understand those, you've got a much better grasp on what the market price or market trend is doing than somebody that's been trading in the markets for 50 years. Bob, we don't have to back test the T-line. When I started using candlesticks 30 years ago, I was the worst investor in the world. I was even a stockbroker for 8 years. And I got out of the business because I realized that the brokerage firms had no more idea about what made stocks go up or down. Everybody's philosophy was, well, you find a good company and you hold it long term and you're going to make money with it, which doesn't always work, as we saw in 2008 and 2022. So let's put it this way. It's been back tested enough that you don't have to take my word for it. Put it on your charts and see how accurate, not only accurate as far as a trend, but we'll see quite often, and I'll find some charts to illustrate that, where prices will move right smack dab to the T-line and then trade off or trade back up, which makes that more relevant because nobody has the T-line on their charts. Or statistically, nobody has T-lines on their charts. So the fact that it goes right to the T-line, let me see if I can find a chart where it's better illustrated. Let me finish here real quick and I'll go on to the next and answer these questions. Yes. So Bob, the answer is yes. The T-line's been back tested for 20 years anyways. One of my first private training students came down from Anchorage, Alaska, and just loved candlesticks. But he says, oh, I'm not hitting it just right. And then he called back about 6 or 8 weeks later and said, put the 8 exponential on your chart. See how accurate it is. Well, the T-line, yes. So there's another answer, or I guess facet. If you're bobbing up and down above the T-line, what's it telling you? Telling you the market's not going anywhere. What we're looking for is when a trend starts, how long do you stay in that trend? I'll get to these. Somebody asked whether this works on Forex. Candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. It doesn't matter what they're buying or selling. Stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it, that's what candlestick analysis illustrates. For your daily charts, do you use the 24-hour candle or just the regular trading? I want to see what everybody's doing. Let me get to another chart here. On a day, on any given day, you might have 2.8 million shares traded, and after hours you might have 23,000. That's not what everybody's doing, that 23,000. We want to see what everybody's doing. So we use the daily chart from the open and the close. Let's see, back tested, yes. Back tested enough to say, oh, we even go further. Being the worst investor in the world until candlesticks came along, I was making good money. Now, good money to me was I wasn't losing money anymore, which I constantly did before candlesticks came along. And then when we put the T-line on our chart, the rate of positive profitability grew dramatically. So I'll keep asking the questions. I'll try to keep answering them as we go along here. So the probability factor, and again, the facts that are that anytime I put on a trade, I know the probabilities based upon the signals and patterns are going to be dramatically in my favor. Now, how long do I hold on to that position? Same scenario. You stay long until you see a sell signal and a close below the T-line, or when you start moving too far away from the T-line, you want to be a little bit more conscious of the fact that the probabilities are they're going to come back and test it. So not only does the candlestick signals tell you when to buy, it also gives you indications of when you're overbought or the exuberant buying has come in, when it's time to sell. So when we see breakouts, there's two major factors that we can utilize on a breakout situation. One, it tells us there's a new dynamic coming into that stock. We may not know what that dynamic is at the time, but it allows us to go back and find out what caused that new dynamic. So once we saw this, we can see that's a scoop type J-hook pattern right off the 200-day moving average, breaking out. Now a lot of people say, oh shoot, I don't want to buy a stock that's already hit a new high or is up 3, 5, 10, 15, 30, 40, 80%. We do if it's coming out of a pattern, because the patterns are exactly what the Japanese rice traders have illustrated for us for over 400 years of when there is a major change of investor sentiment. So that breakout alone tells us what we use as what we call the RARE process. R-A-R-E, research, reverse analysis, no, I said this all right. Research analysis, reverse engineering, meaning if something big's happening and creating a signal, then we can go and see what's causing that signal. You forget to tell the T-line which moving average is. I'll say I don't know what that is. You forget to tell what the T-line is, the 8 exponential moving average. The blue line is the 50-day moving average. The red line is the 200-day simple moving average. Now the reason we have those on our charts is we don't use those to make our decisions. We're using those because every major money manager around the world uses those to make their decisions about their positioning in their portfolios. What we're identifying is what are those decisions everybody's making at those levels. So I get a lot of questions that say, well, wouldn't the exponential 250 be better? The answer is no. We're using what everybody else uses to see what decisions they're making. Now, this gray line is the 34 EMA. The nice thing about candlestick charts is the most powerful aspect of a candlestick chart is the signals and the patterns themselves. Everything else acts like a confirming indicator. So the 34 works reasonably well. 34 EMA, yes. Now, some people say, well, why didn't you put on the 20? You can put whatever you want to on your chart. What you're trying not to do is clutter up your chart to take away from the relevancy of what the signal or pattern is doing. Again, everything else becomes a confirming indicator. Now, I also use stochastics, 1233, because I'm a swing trader, and it works out extremely well for all. When I first started learning candlesticks 30 years ago, the norm was 1455, but I wanted something a little bit quicker because I'm a swing trader. So one night I spent 30 minutes just playing around saying 1432, 1451, 1244, and finally came up with 1233. And so when you add all that together, the Japanese rice traders have a very simple philosophy. If you see a candlestick buy signal in the oversold area, the probabilities are pretty strong that there's been a reversal. If you see a candlestick sell signal in the overbought area, probabilities are pretty strong there's a sell-off coming. Different for a pattern. A pattern breakout usually occurs when your stochastics are in the overbought condition, because that's part of the Japanese philosophy. Is where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. So let me get back on track here. So we could see this was a nice breakout because of this kind of scoop type pattern breaking out through the resistance level. You can see we've got some very good profits. Now, what did that tell us? Oh, it told us it's pretty good, but then you'd say, well, look at Bigalow. It's done a fry pan bottom, gap up through the 200. What's that telling us? Slow stochastic, CT. What's that tell us? Oh, they're buying these stocks for some reason. And if they all have a kind of continuity, in this case, the continuity is they're all China stocks. So everybody's jumping into their China stocks because they've opened up their economy again. So anything that we can add to our analysis of why a pattern or chart is working, the better we are, or the better probabilities that we're in the right place at the right time. So why are these being bought? Because everybody's jumping in to the China stocks. Will they go up forever? No, but we know when to get out because just as we have strong buy signals, we'll see when a sell signal takes place. So anytime you can start seeing candlesticks, signals, and gap ups, most money managers say stay away from gaps. You don't know what's going on. If you know what the candlestick signal is telling you, followed by a gap up, it's not only telling you has there been a change of investor sentiment, but now that new sentiment has come on with very good strength. That's where you exactly want to be. You consider the movement of the 8 EMA? No, we're not trading the T-line. We're using the T-line as an indicator. Again, if you just, and I say, you don't have to take my word for it, but if you move on the assumption that what I'm telling you has worked for tremendously over the years, that if you see a candlestick buy signal and a close above the T-line, the probabilities are very great that you're going to be in an uptrend. If you see a candlestick sell signal and a close below the T-line, the probabilities are very strong you're going to be in a downtrend. Now, you can use that analysis for everything. So if my first analysis every day when I get up is which direction is the market going, well, right now I can pretty much say it's sideways because it's bobbing right here at the T-line. Over here, good assumption that we are in an uptrend with our J-hook pattern. And notice what's happened on this chart on even our J-hook pattern. They couldn't ever close it below the T-line. They couldn't close it below the T-line. And until that happens, the assumption is you're in an uptrend until you see a sell signal and a close below the T-line. Robert, that is the whole premise of candlestick analysis. It is just simple logic put into a graphic depiction. I had a hard time being convinced 30 years ago as I was learning candlestick signals and patterns that this could possibly be this simple. But then you would go back and use the logic that if this didn't work, or these signals didn't work, like anything on Wall Street, if it doesn't work, it disappears very quickly. Candlestick analysis has been around for 400 years. A lot of people say, well, why isn't everybody using it? And the answer is people didn't know about it. I didn't know about it. I started investing when I was knee-high to a grasshopper. Right out of college, I went to work for Kidder Peabody as a stockbroker, and I didn't know anything about any technical analysis until years later. And all technical analysis has some degree of probabilities to it, whether it's Bollinger Bands, Fibonacci retracements, trend lines. But they all have kind of, I want to say, a little bit of subjectivity. Even, especially Elliott wave analysis. I mean, there were so many different wave counts that even if you had, I can remember being in the market technicians group in Houston, and when we'd have a meeting once a month, if there was 8 Elliott wave analysts in that group looking at a chart, and somebody asked, what's that market doing? Out of the 8 analysts, there'd be 40 different answers. So what actually became the most compelling facet of investor sentiment is, or candlesticks, is what is investor sentiment telling us? I always tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So I'm getting way off track here. When you trade, Eric, I trade soybeans, cattle, the dollar during the day, and I use a combination of the 10-minute chart, which is my bellwether, and when I get ready to buy, I flip down to the 5-minute chart and trade off of that. The T-line is the 8 exponential moving average. A lot of people ask, why don't you use the 9 simple or the 10 simple? Use whatever you want. I'm starting off with, I've been using the 8 exponential moving average. I used to be the worst investor in the world. When candlesticks came along, I started to make decent money. When I added the T-line to the chart, I started making very good money, very consistent. Any time frame, yes. Candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. It works just as well on the 1-minute chart as it does the monthly chart. So depending on your time frame of your investment holdings, if you're a long-term investor, you probably want to use a combination of the weekly chart and the monthly chart. I'm a swing trader, so I use the daily chart. How do you determine the target when in the trade? Bob, let me get to that. Yes, trading is just like any other sport. You have to practice it because our biggest deterrent for making money is our own emotions. And that's not, so you have 2 major elements of investing. One, finding a trading strategy that works. Then 2, controlling your emotions to use that strategy correctly. The reason most people lose money is because they do the exact opposite of what is normal investing. Get way off on a soapbox of how stupid some of these analysts are that say, I'm buying Apple at 150, and if it goes down lower, I'm going to buy some more. My question is, if it's going down, why are you buying in the first place? Yeah, there's Hogswood there. All right. 1233 on stochastics is just the time frame. And that's about all I can tell you, Bill, because once I put it on there, I don't pay attention to it. I don't even remember what the formulas are for stochastics. All I want to know is if I'm in the overbought area or in the oversold area. So you use 2 time frames. Robert, you can use whatever time frame combinations depending on how often you're trading. If you're day trading and you're only making 2 or 3 trades a day, maybe you use a 10-minute, 30-minute combination. Back when my younger days, I would trade the E-minis. I would trade the E-minis off a 1-minute, 3-minute, 10-minute combination. So find out what works for you. And again, each chart, this chart could be a 1-minute chart, a 10-minute chart, or a daily chart. Your preference to buy on the 5, well, my preference is I want to see what the 10-minute chart is doing. If the 10-minute chart is starting to set up, then I'll move a little bit faster and see what the 5-minute chart is doing to see whether it's confirming the direction of the 10-minute chart. OGR, that's another benefit of the candlestick chat room, is even if you're still in the learning process, there's enough good traders that have been using candlesticks for a long period of time that they're identifying the good charts, and then if you want to find out why they're identifying that chart as a good chart, you just ask, what's that chart doing? And somebody will say, well, it's doing a J-hook pattern or a fry-pan bottom. Now, the other side of that coin is everybody should probably have their own specific trading styles, so you don't need to listen to everybody. I always use the statistic of probably about 10% of what goes through a chat room is viable for your particular trading style. Okay, whoops, I'm getting way off track here. Shoot, we're not even to the live charts yet, and we're halfway through the hour. So not only do you have logical places where you can see a pattern breaking out, like right here, right where the pattern started, and where everybody else would be watching, the breakout through the 200, what do we expect coming out of a fry pan bottom? A very strong price move. Now, look where it is compared to the T-line. You've already had a big price move, so where do you get ready to sell? Well, I'd be more alert to selling because of the distance from the T-line. I might have a safety stop right here at the halfway point of this candle. So this kind of alerts you to human nature. The further away you move from the T-line, the higher the probability it's going to come back and test it, especially when you're up here in the overbought area. All over the place. Do you have a structured training program? Colin's not a structured training program. I am in the process of doing some articles for Stocks and Commodity Magazine, Traders Magazine, Tasty Trade for those that are at, what is it, Tasty Trade? But one aspect that I've discovered is everybody has their own niche. They might not know what that niche is yet, but if they look at enough things, the benefit of candlestick analysis is it works. Through the years, I've heard so many people get promoted online that we've found the secret of how to make money in the market, so they try that for a month and a half and realize it didn't work, and after the month and a half, they hadn't learned anything. So they go on to the next one, and the next one, and then they figure out, they can't trade. The thing that comes from candlestick analysis is it works, or we wouldn't be looking at it today. There are expected results. So all we have to do is learn how to use them. Now, are you going to learn everything? No. Some people would say, well, I really recognize this type of pattern, or I know what to do in that type of pattern, so you kind of zero in. So, Colin, that was a long answer to say we teach everything, but then we try to formulate in everybody's mind what works the best for them. Yes, so when we do our trainings, we got another one coming up on the 14th, which will be market timing at one of our mini tradings we'll get to here in a little bit. But these are all kind of segmented parts of analysis so that you're not getting overloaded all at one time. Oh, how do I log in this room from mobile? Ogre, unfortunately, I don't have the answer to that. That's something that you could email Abraham at candlestickforum.com and ask that question. I got a message from Terry C. I don't know. Terry C is one of our good steady members. May have been giving you some advice. How do you scan for opportunities? We'll get to that here in a second also. as the author. Yeah, I've written 3 books. 3 books on candlestick analysis and 1 book on who is Santa and how did he get to the North Pole. What do you consider overbought? Overbought is when the stochastics come up above 80. Oversold is below 20. Oh, yeah, we've got free trials. Everybody should try out the trials. Again, to get off more off track, we call that our horseradish marketing. I was brought up in Pittsburgh, which is the home of Heinz Foods, which I never paid attention to. Heinz, a big company, food, kind of boring. But then I read the history of Heinz, how I think he was 12 years old when he started. His mother would make the horseradish that they had in a 3/4 acre plot. It was good quality, and so the normal glass back then was green. Well, he would start marketing his horseradish in a clear bottle so everybody could see how good it was. And so that's why we call this horseradish marketing, is that there's nothing secretive about candlestick analysis. It works. All you have to do is learn how to use it, and the more you see it, the more you're going to be convinced that no matter what type of trading program or whoever you might be following, if you make your charts into candlestick charts, you're going to see everything that much more clearly. Heinz took, I don't know why they did that. I guess it got too expensive. Horseradish. I was so proud at 8 years old to bring home a bundle of white carrots. There you go. Okay, so the same thing as far as a breakout works just as well on the bearish side as it does the bullish side. This is where we always say observe the obvious. Look where your bearish engulfing signal occurred. Right smack dab at a level that everybody else was watching, the 50-day moving average. Look where the next day broke out through this support level that everybody was watching. That tells us this is now a high probability trade to the downside. If you use that same information with a bearish signal, bearish engulfing signal, that's why we recommended going short on ZI today. Notice what they did after the signal. They gapped down. So just the simple logic of that is, if you see a candlestick reversal signal, and the next day they gap it, that tells you not only have they made a change of investor sentiment, but they want to move in that direction with great enthusiasm. That's exactly where you want to start going short. So when we see a pattern like this, the reason that you want to know your signals first, your ABCs of candlestick analysis, is the 12 major signals. And remember, you don't have to learn all 50 or 60 signals, because 80% of them don't occur often enough to spend mental time and energy to try to learn them. The 12 major signals is what I've already kind of cultivated for everybody, that if you learn the 12 major signals, basically 6 longs and 6 shorts, you're going to have a dramatic grasp of what's going on in investor sentiment, especially at specific levels. For the Dow chart, a few days ago, there was a gap up through the T-line, then it went sideways. How do you avoid this? Go back up. Let me, I better do it now or I'll forget. There was a gap up over here. Yes. So you had your bounce off the 50, gap up, but look where it was to the T-line. So what's our T-line rule? You can be buying if you see a candlestick buy signal to close above the T-line. So it closed above the T-line, so what do we need to see to confirm our bullish signal? Positive trading. The fact that they opened it lower and traded it lower, what did that tell us about the bullish sentiment? It wasn't there. You didn't do anything that day as far as any major buying or selling. All right, now I've gotten off track again. Here we go. All right, so this is what we're looking for. Investor sentiment rolling over. What should I do when the wife yells at me, get off the computer? I'll come up with an answer for that. That kind of goes in the same theory that if a man makes a statement and a woman doesn't hear it, is he still wrong? The signal will come from daily candles, then enter lower time frame like the 10 minutes. Yes. Tella, let me get to the live charts. Yeah, I was telling the chat room today, I told Sandy that whispered in her ear the other night that I was going to make her the happiest woman in the world. And she said, gee, I'm sure going to miss you. That's right. Or tell her you're buying her something from Amazon. Enrica, yes. I put out 2 or 3 stock picks every day, or in case of today, 6 stock picks. If we think the market's going up, we'll probably have 3 long recommendations, maybe 1 short. If the market's going down, we might have 3 short recommendations and 1 long. Now, these recommendations aren't so that you have a recommendation to trade. These recommendations are when I put them on a 2-minute video at night that you can look at it and see what the rationale or what the signal or pattern or the reason for that being a bullish recommendation. So again, we're not trying to give everybody fish, we're trying to teach them how to fish. All right, how do you identify those signals? Which ones you identified? This is a bearish kicker signal. Notice how it opened here and closed here. We're already rolling over. So the fact that if we were getting ready to short this, but it didn't execute yesterday, when it gapped down below the previous day's open and started going the opposite direction, producing a bearish kicker signal coming out of a bearish pattern, that's when you would start going short. Yeah, so Becky's putting in, yeah, so now this is just one case. Up here you had a bearish flutter kicker signal. So this is why you want to know the different signals and where they're occurring as far as a pattern. So again, that was kind of identifying the breakout patterns. This is a Saturday spotlight that we're going to do. Now these spotlights are scheduled for an hour. Unfortunately, as you can see, I talk like a blue streak. They usually go on for 2 hours, but you get a lot of information that kind of, so that you're not being inundated with a lot of information all at one time. You're getting a lot of information specifically on how you can identify when there's market timing improved. Now, the reason you want to know market timing is, I'll go on to, is the purpose of, obviously, if the market is in an uptrend, you're probably going to have much better prospects for scanning or bullish trades. Am I on center here on this chart, Jim? Oh, okay. So Becky has put in the link for our session on this Saturday the 14th. Let me do this then. I will close this, and then I will try to read it. No, that was way off. Candlestick analysis. You at least know the probabilities are in your favor that the result of that signal or pattern, which has been identified by the Japanese race traders and utilized by the Japanese race traders, are going to put the probabilities in your favor of being in the right trade at the right time. Darn, I was reading question and forgot how I was going to finish this statement. Oh, but the other side of that element is probably about 30% of your trades might not work. So the important factor of investing is knowing when a trade's not working so you can close out. You've all have heard money managers tell you, cut your losses short and let your profits run. Well, I heard that for 40 years, and I've never heard a single one of them tell you how you cut your losses short and let your profits run. Candlestick analysis has very simple guidelines as far as when a trade isn't working, so you can get right back out so you can move on to a trade that has better probabilities. Do you need to be a morning person to trade this way? Not really. It all depends on what your time frame is. If you're a swing trader or want to have trades that are going to last for 2, 10, 20, 30 trading days, yeah, you're going to just analyze what the daily charts are telling you. Your entry strategies can be applied to, let me see if I can find one, what it should be doing the next day. If the market is opening positive and that stock is opening positive, I'll put a buy stop at a certain spot that tells me if it comes up through this level, it's confirming our buy signal. Oh, yes, we start at 10 a.m. It's supposed to go to 11, but figure 12, 12:30. Yes, the Japanese rice traders did not become wealthy using candlestick signals. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries. And they did it with the most boringest trading entity you can think of, rice. That's 7 a.m. on the East Coast, or on the West Coast. All right, did I scroll fast enough? All right, so what we want to look at now is the first thing we want to do on any given day is analyze which way do we think the market's going. Well, as we can see in the Dow, the last 2 weeks, it's been showing us it's not going anywhere. Now, why would we short something if the market's not going anywhere? Because the NASDAQ told us we're in a downtrend, and they've never been able to close back up above the T-line. Even when they gapped up, what is our what should our patience be? We want to see whether they're going to close above the T-line, which a couple days ago they didn't. And what's this pattern setting up? Now we got a bearish J-hook pattern, but if this starts trading lower, that means things that we can see that are good short positions. Oh, for crying out loud, why does that not come up here? Did I hit the wrong symbol? Things like this tells us, whoops, there's probably a lot more downside to this one. So here's how you can, this is how I learned candlestick analysis, is where was the place to start shorting this? Well, there was our bearish belt hold signal confirming with a close below the T-line, then gap down. It told us the bears were definitely in control. How long can we stay short on this? Well, they've never been able to close it above the T-line. The reason that is important is if you're anything like me, what is our trading strategy? I say ours, my trading strategy. Whoops. Before candlesticks came along, if I had a profit in a stock, I was just happier than a pig in doo-doo. And then my rationale was, I better close out this position because, boy, would I look stupid if I had a profit and let it go back to be a loss. So I'm going to close it out. Well, that all disappeared, knowing as long as you're above the T-line, it keeps your emotional trading decisions out of the way, and you use what is the probability factor. You stay long until you see a sell signal. Or you can stay away, or, again, the numbers facet. is that on any given day, setting up simple scans, which once you set them up, you don't have to worry about them, you just refresh them every day. Once you do your scanning, it takes less than 10 minutes each day to figure out which ones are going to be the strongest trades, and we'll get to some of those here in a little bit. And again, right now, we're in the Chinese stocks because they're the ones everybody's buying. We stay in them till we see a sell signal. Hardest thing about candlestick trading is suspending all the junk you learned before. That's exactly right. That's exactly right. Bill, when I started learning candlestick analysis after being a poor stockbroker for 8 years, I was renovating houses in Atlanta, Georgia and reselling them. And somebody dropped candlesticks on my desk, and I figured anything as sophisticated sounding as candlesticks I wasn't going to be or pay attention to. But they kept harassing me and said, "You were a stockbroker." And so when I finally picked it up, which was after about 3 months of them badgering me, the first thing that hit me in the side of the head was, man, this makes sense. And the more I looked at it, the more sense it made. And so now, if you have, like myself, full conviction of candlestick analysis, and you hear some of these analysts on the TV programs telling you, oh, you should be buying Amazon at this level, and it's still heading down, and you're thinking, why are you buying when you don't even know how low this is going to go? Anyways, I could go on. How does one get the free trial? Ooh, I don't know. Becky, do we have a link for the free trial? Yes, there is. So that's what I was answering. Is out of 9,500 trading entities, there's always something out there that you're going to find within minutes every day of not only that it's a good trade, but it now allows you to use the rare process, go back and see why that stock or sector is a good trade. So let's take a gander here at things that we use to tell us when to get in. We are still long PHVS. You can see what happened here. That was the alert. Not time to get in, not time to get in, not time. Look where it turned around. Right smack dab on the T-line. And so what did this tell us? That there was a new perspective of what's going on in this stock. Profit taking over. Now that perspective is kicked in. How long do we hold on to this? As long as it stays above the T-line. And note how often it opens right on the T-line, heads up, comes back to the T-line, heads up, right on the T-line. Now that is relevant because, again, nobody has the T-line on their chart. So it's not like they're coming back to a level everybody's watching and bouncing up. That's that much more evidence that the T-line is kind of a natural support and resistance level of human nature. This is the type of thing we look for. And the reason we do is if we see the best friend signal, the best friend signal is a doji, which is a day of indecision, followed by a gap up. A lot of people say, shoot, I don't want to buy a stock that's up 50%. Well, you do if something new is coming into that stock, because usually the best friend signal will tell you you've got a lot more upside in it. That was data breaking out. We did the other ones. Anything that was related to a Chinese stock that has a nice bullish pattern. You can see the fry pan bottom J hook break out through the 200. Now, why is that important to us? Because we can see the fry pan bottom pattern setting up. What is everybody else watching? They're watching to see whether they can get through this price can get through the 200. When it does, they are all confident now there's uptrend. We're already in here early, ready for that next price move. There was your hammer signal when we recommended IMMR, followed by a gap up. through the T-line. What's it telling us? Well, we're still above the T-line. This one's still in an uptrend. Whoops. ResMed. This is what we call observe the obvious. Came up, came right back to the 50, did a bullish harami, which tells you the buying or the selling has stopped. A couple days later, did a bullish engulfing. And where did all this occur? Right off the 50. So it doesn't take a rocket scientist to say, well, they're buying right here. They're getting buy signals off the 50. Now they're closed above the T-line. What can we look for? Wave 1, wave 2, going into wave 3. ETNB, you can see the fry pan bottom right off the 50, the breakout through the T-line, the breakout through this level, and here's what we constantly teach people. Look at your belt hold signal. Belt hold signals when they break it way out of the trading range, and then they bring it right back up into the trading range. And notice what element of the trend analysis was very important here. They didn't close it below the T-line. And what happens when you see a belt hold signal? It's called the belt hold because the Japanese rice traders say the sumo wrestlers are back. One's trying to back out of the ring. The other one's grabbing his belt and pulling him back in, and the fight continues. That pretty much tells you they took a lot of the sellers out of the way, which means any buying now has less sellers in the way. We saw that same scenario right here on Moderna. There was your kicker signal, close above the T-line. There was your J-hook pattern, and look at your belt hold signal. Opened way down here, and where did they close it? Right back up above the T-line. What'd that tell us? Not only did we have a J-hook pattern, but they couldn't close it below the T-line. You could be, even if you miss this move, you could be buying here, knowing that this move and this move are going to be approximately the same. Let's see. JD.com, I think that's China oriented. Look how it broke out with a best friend signal. Still would be a buyer of this one on positive trading. We recommended this one today, I think. No, recommended it or told or mentioned it in the chat room. It can still be bought if they trade this positive because now you're in wave 1, wave 2, wave 3. And how did wave 3 start with a breakout? Your best friend signal, which is your one of your strongest indicators of a market move. So this is why the T-line is important. Because as long as you stay above the T-line, now this is if you're doing the money management I do that keep my emotions out of my trading. If you're doing your analysis of 10 positions each day, how long does it take to do the analysis of this one? About 2 seconds. Yep, still above the T-line to stay long. Where's my safety stop? Below the T-line. Now I'm on to the next chart. But that's what the T-line basically does for you. When you see a breakout, now your trading analysis becomes very simple. Even though this is waffly, you just stay long as it stays above the T-line. That's like a picture-perfect T-line. Yes. Oh, boy, I'm trying to think of the one we did a long time ago. It was one of the energy stocks. Get a kicker signal above the T-line, and it went up 200%, just staying above the T-line the whole way up. Whoops, I've already got a time. I'll try to go through some of this a little bit more. So, Henry, are you in here? That's not what I should be looking at right now. Did I do that wrong? VREX. There's something wrong there. Maybe it was VNTX. Yeah. Or maybe it was VRTK. Yeah, I did something wrong. So I'm going to quickly move on before. So there's different elements of using the T-line. Oops. I think there's a 200 was right on here. Why is not the 200 over here? That's not making sense. Yeah, let's see. Try this. Sorry about this. For some reason, the 200 disappeared off of that other chart. Well, doing this like a all right. Now, what was the one I just GBT? Was that it? No. GBTG. GTBG. Well, for crying out loud, GBTG. Why is this not working right? ETEB. Eesh. All right. Well, it did it again. The 200 was right in here. So this is what we call a T-line crunch because it was crunching up through the yeah, so that's not working well as an illustration. We're still short stocks that can never get back up above the T-line. Rivian. Once it closed below the T-line, look at the obvious. There's your doji, indecision, failure right at the 50, then closes below the T-line. Ever since then, you don't have to worry about, oh, should I take profits? Should I take profits? No, it's still moving in a downward direction. Same thing, we made a huge profit on Carvana. What the heck am I doing tonight? Oh, I can't even see this one anymore. But Carvana came from 375 all the way down here to the $4 level. And most of the time, if you got out of it, you could re-short it because what was the most compelling evidence that this was heading down? The downtrend. This strong movement to the downside. So we recommended shorting this one. It didn't execute yesterday because it traded up. Look where it is now. If it comes down through this level, what can we assume? This support level is not acting as a support. You're in the next wave to the downside. Richard, hold on to your individual ones as soon as I get done here, which is still ways away. I'll tell Jim to do the double line, and you can ask about individual ones. So we're shorting Zoom Info. We shorted Snow. Let's see. And then the biggies. This is the only one that's working reasonably well is Netflix. So where's the next likely target? could be coming up here. This is where somebody was asking, what is your targets? You want to watch to see graphically where everybody else is watching. Knowing what your targets might be gives you that much better prospects of the type of trade you want to put on. So I might be able to, no, don't worry about it, Richard. What we might do is say, well, maybe we'll buy a 335, sell a 340 for 40 cents. And if it goes to this level, that turns into $5. Now I did the same thing today. Oh, I can't remember which one I did it on. Oh, I think it was this one. See the strength of BEKE? It's already had a hefty move, but where could it go to? The top of this channel. So what would be a good way to take advantage of this without a lot of money involved? Well, I bought the 20s and sold the 2250s for 11 cents with the idea that if it comes up here, that 11 cents now turns into $2.50. That's a decent rate of return. So that is, somebody was asking earlier, how do you calculate your targets? Because if you see something like a pattern, notice that your J-hook pattern on an AMAT a while back, and look how they started the next wave with your best friend J-hook pattern right off the 50. We call this a J-hook plus. The J-hook plus is where you can obviously see where the support level is. So where was our target? Well, if this was wave 1, where was approximately wave 3? Heading right up to this level. Now, would I buy calls here? Might buy calls here, but if it continued the next day or so, maybe I buy a spread up here for very little money because I'm already making a profit on my calls. But if it does move the way it's supposed to, a little bit of money is now greatly expanding the profitability of that trade. There are other trades. Apple. What would you do with Apple? Well, if you went short, all you had to do was stay short because it's never closed up above the T-line. NVIDIA, just now rolling over. If the NASDAQ starts trading lower, might short this with the basis of wave 1, wave 2, wave 3, all the way down here. Woody, that's up to each individual. Now, I'm usually doing spreads that are only about 2 weeks out. The reason for that is the maximum price of your spread is going to be at execution or expiration day. So if you get too far out ahead of yourself, if the price moves in your direction with great enthusiasm, the price of your spread may not move or may even go negative even though it's moved in the right direction until you get much closer to your expiration date. So I usually use around 2 weeks out as my ultimate for a spread time frame. Now each person, now that's what I do. I always tell people everybody should learn what is most comfortable for them and what they find to be profitable for them, because the nature of my trading may be completely different than the nature of somebody else's trading. Amazon, nothing going on there. Tesla, stay short. Never been able to close above the T-line. And, oops. So the breakouts are not difficult to find. ANGO. I don't even know what they do, but when I see a breakout like this with a best friend gap up, first thing I'm going to do is go see what created that gap up. Was it earnings? Was it new product approval? Mark, that's also up to each individual. We teach people how to use, as a member, in the members area, we have a lot of trainings on either Tuesday or Wednesday night during the week. We have the Monday night session for members. The Thursday night is open to everybody. But then for members, we'll do special sessions like how to do credit spreads based upon candlestick price movements, or what are the best debit spreads, or what's the best option trade. Might be a combination of calls and a spread. So it's now learning what strategies to use with the appropriate or identifying the appropriate price moves. Sam, hold on. I'll get to these. I'm trying to rush through what we had. Oh, yeah, they were mentioning how this one went from 175, but now look at the chart. You might want to take a look to see what's, that's the doji rule. The doji rule, like the T-line rule, has very high probability factors. The doji rule is if you see a doji, the probabilities are pretty strong that the price will move in the direction of how it opens after a doji. Go to. This is what we call the classic pattern. Classic pattern is your fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. Look when it was time to take profits on this one. There was your doji in the overbought condition, and look how far away it was from the T-line. The doji rule is very simple. If it opened lower the next day, take profits, because where do you think it's at least coming back to? The T-line. But the classic pattern is, you can see a J-hook pattern setting up. What's the prerequisite for a J-hook pattern? A strong price move. What is the result of a fry pan bottom? A strong price move. So this works in conjunction with each other, because this is how human nature works the same way, time after time. Strong price move, profit taking. Now it starts back up. Why? Because whatever was built into this strong price move before the profit taking, it's price still around, and that's what continues the next wave being the same as the first wave. This is what we're looking for. Now, another point of illustration here is, look what this one did today. Nice bullish trading. What did the market do today? It sold off hard. So there's another facet to the patterns, that if this is a buildup of investor sentiment, if the market kind of turns against you, it's usually not going to affect the pattern, because it's something going on other than what the overall market trend is telling us. So there's another kind of J-hook fry pan bottom. Where would you be buying this one? If it came up through this level, telling you they broke out, now we can pretty much calculate wave 1, wave 2, going into wave 3. So anytime you see a pattern setting up, it's going to give you much higher probabilities that you're heading in the right direction at the right time. Look where they reverse this. There was your bullish Haramis, smack dab on the 200. And what does a bullish Harami tell you? It's one of the 12 major signals. The selling has stopped. Now what do we look for? Buying and a close above the T-line. Now where's your target? Well, your first target is you want to see what happens at the 50. Your second target is seeing if they get back up to the top of that level. Perry, same scenario. Look at your morning star signal, one of your 12 major signals, right smack dab off the 50 up through the T-line. Now look where it's going. If it goes through this level, so if you were long here, just watch to see whether it's going to go through this level or whether you got a double top. If it goes through, now what can we calculate? Wave 1 and wave 3 is likely to be the same. You're not trading the stochastics. All you're using is using the stochastics to tell you where you are. So if you're in an overbought area, you probably want to be a little bit more conscious of what's happening in the overbought area. It's trading up over 80. At 80 after hours. Whoops, I don't have the other screen up. All right, so that must have been earnings. Excuse me. IQ, same scenario. Broke out. How long do you stay with it? As long as you don't see a sell signal, but you're a little bit more conscious of a sell signal because you're up here in the overbought area and you've started to move away from the T-line. It's all right to return. All right. Thank you, CJ. Thank you, Travis. All right, let me try to get through this. RCM, that's a T-line crunch. Notice how the T-line kept crunching this price right up through the 50, which is an obvious resistance level. This becomes a much stronger factor to be buying on positive trading. I thought you said you have a free trial. I think we do. How do you scan using your system? You can buy an add-on with Metastock with all our signals and patterns already built in. So check with Jeff Gibby or their marketing group. Once you download it, now not only do you have the signals pointed out, but it will also explain what that signal is, describe it for you. Yeah, we'll be doing some more sessions with Jeff here pretty soon on their scanning software. Let's see, still trying to rush through this. There's a bullish flutter kicker signal. Where would you think the first target's likely to be? Up here to the T-line. PDD. There's your breakout through, whoops, this level. That one you might see on the recommended list tomorrow. And this one didn't come up over here. I don't know why. I don't know why that does that. So there's your scoop type pattern. You could get ready to buy this one on trading above the 50 because what do we expect coming out of a scoop pattern? That slingshot effect to the upside. Bob, we're not trading resistance levels on the weekly. We're not trading the weekly. I'm just trading what is happening on the daily right now. I don't care what the weekly says. I don't think. And not anything that I would consider a resistance level there. Because everything else is a concern, but what's telling us is happening at those levels is more important. Are your trades all on the major exchanges? Corey, my trading universe is stocks that trade more than 200,000 shares a day on average and usually trade above $5. The reason for that is I know that every time I put on a trade, the probabilities are in my favor that I'm going to make money. So I want to get as much leverage as possible. So I want to be able to margin. Back in the old days, most brokerage firms didn't margin stocks unless they were above 5. I think that's changed now. But I want to be able to get in and out. So those parameters are usually keeps you away from the pink sheets. But you can set up your universe as whatever you want. If you like to trade 50-cent stocks to $3 stocks, you set up your universe that way. If you like to only trade stocks that have options You can set up your universe that way. Do you trade right at the open? No. We do an entry strategy that is common sense built into the charts, that you have 4 different quadrants. One, if the market's opening positive, the stock that's confirming the buy signal is opening positive, I'll probably buy within the first 90 seconds. If the market's opening positive and the stock that I thought I was going to buy is opening lower, I'm not going to do anything until it comes back up to the previous day's close. If the market's opening lower and my stock that I was looking at is opening positive, I won't jump in it until I see what they're going to do with the market at opening lower. And then the 4th quadrant is if the market's opening lower and the stock that I'm looking at is opening lower, probably pretty much says that I'm not going to be buying today. So everything built into the trading strategy is just kind of common sense of what do you do at the with the appropriate confirmations. Oops, I've dragged this way out. We're way past your bedtime. I've shown this to say that if you're in a big move and they close it back below the open, close it. That means the bears are back in control. That's it. We did that one. We did that one. Zeus. There's another one that, first of all, you can see it's in a downtrend. Secondly, you can see they're having a hard time getting above the T line. Third, they trade lower. This little support area is not there anymore. You got 10 pots of coffee on there, Darren. All right. SI. So there's your bearish flutter kicker setup. Now when they gap down like that, what's the implication? The bears are still in control. That's when you can start shorting with more downside. Oh, Enrica, Jim will tell you how to get the recording. RPM, another one. That you have a dumpling top, the opposite of a fry pan bottom. When they're gapping down, this is an implication that they're going to be heading this one down for a long time. That could be is what's not only putting them in trouble, but maybe near bankruptcy. Few more, and then we'll take. So this is what will happen when you see a big sell-off. There's lots of people that say, get me out of this, and it will continue down for a while. All right, and CFLT. Another one that has broken this kind of wedge that you can go short. CFLT. GTLB. Bearish engulfing, gapping down. And CrowdStrike. Where is this one going? You can see it's in a downtrend, and now they've done a best friend gap down. I told you there's a lot of selling force. So the 50 EMA is important. The last chart had a green candle above the line, but you said short it as it was kissing the underside of the 50. Oh, what was the last chart? GTLB. That one? CFLT. This one? The 50 is important. The last chart had a green, even before that one. That one. before. Oh, man. RPM. This one? Yes, so Bill's got the answer. We're not trading the moving averages. The moving averages are just a good indication of what everybody else might be doing at those levels. We're trading the signals, which are enhanced by seeing what everybody else's decisions are at those moving averages. Okay, so bottom line through the years is everything you see on a candlestick chart is just merely common sense put into a graphic depiction. When a lot of reaction when we're teaching people candlestick signals or what happens at a price move, like my reaction, I see a lot of people say, yeah, I knew that. Now they can see it in a graphic. All right, so are there any general questions on candlestick analysis? You always wait for the close of the candle that breaks the T-line. Yes. Yes, because that probability factor is so strong. Today, somebody was saying, should we sell Summit here? And they were asking that around 11 this morning. And the answer was, it's already here. So why don't you just wait to see what it does by the end of the day? If it stays above the T-line, you stay long. If it closes here, close out the position. Do anything with insiders? No. Anything that is affecting the stock price is already built into the stock price. So if there's an important announcement coming out, it's already built into it. All we're doing is analyzing what everybody's decisions are based upon said it the wrong way. The stock price is based upon everybody's decisions, knowing what information is out there. So a lot of people say, well, if a stock has a big short interest, isn't that better? No, not if anybody's not buying it. Is our trading mostly the next day after you see the closing of a... Yes. I would rather be a day late than trying to anticipate something happening. How do you scan? We've got a lot of the formulas for the scanning and Thinkorswim. I think they got our software there. Robert, I used to be in Houston. Now I've moved back up a few years back to take care of my mother here in Pittsburgh, who since passed away, but too lazy to move anyplace else. Got a nice barn that can hold, I'm down to, I think, 15 cars. Got 6 fireplaces in the house. Yeah. I spend 95% of my day sitting in front of the computer screen. Okay, I guess with that, Jim, let's go ahead and do the double line. And in 3.6 seconds, let's do the next double line. All right. Oh, some of you have jumped the gun, haven't you? All right. Advanced auto. Stay long, as long as you're above the T-line. Prague, not coming up. WHD. Nothing wildly exciting about this one. If you're long, you stay long, but you want to see it get through the 50. If it starts trading lower, you're kind of in a sideways mode. I'd move to someplace else. QDEL. You stay long as this stays above the T-line. Notice how today it came right smack dab to the T-line and bounced back up. ELF. Ew. The rhetorical question is, which direction is this going right now? At this point, it's sideways. You don't know whether it's going to go this way, or this way. So if I was long, if it didn't open positive and trade positive tomorrow, I'd close it out and go find something that looks more like this. HKD, this is where you go to your 10-minute chart. Now, how would you have traded this one today? You buy it here, you buy it here. This is where the 10-minute chart works very effectively. Say, oops, I can be buying here, I can be buying here, I can be buying here. But now look what happened on the 10-minute chart. Look how far away you are from the T-line. This is probably where you want to start taking profits, or definitely start taking profits here and wait for the next buy signal. Why would you do that? Because look where you are on your daily chart. Look how far away you are from the T-line. That's your warning. Amazon. Whoops. Early entry for dumpling top turnover. Now that it closed below the T-line. It's not a dumpling top. A dumpling top is something you see as big rounding top. This is just in a continued downtrend. So would you short this one? Well, if we woke up tomorrow and saw the pre-market futures are showing the Dow is going to open down 140 points and the NASDAQ down 60, and this is opening lower, yeah, that's telling you that's probably a good time to start shorting. And where would you not want to see it close? Back up above the T-line. That's a nice fry pan bottom. So on a $2 stock, I want to make sure they trade a good million shares or more so you can get in and out of this one. But you could definitely be buying this one on positive trading. This is illustrating a very strong bullish setup. Another one that came right smack dab to the T-line and bounced back up. You just stay long on this breakout. It's kind of a bobble breakout where they failed at the 200. Now they gapped up through the 200. Expect more upside. TECK. If you were short, I would have covered the short. I probably wouldn't be going long. Just no real great direction. Buy tomorrow, you could, but it's probably not your best trade setups because you're still kind of in that sideways mode. VET, if you're short, you stay short. You're getting toward the oversold area. So if I was short, look at your bearish kicker signal, accentuating the downtrend. If I was short, I'd have a safety stop probably above yesterday's doji high. If it comes up there, that tells you they're probably doing a little bottoming action. MPC, another one that if I was short, I would have covered the short, but I probably wouldn't be going long on that sideways mode. Summit, all you can do here is stay long as this 45 degrees stays above the T-line. SPRB, that's a nice fry pan bottom. Just make sure there's a lot of volume. And if this opens positive tomorrow, especially if it breaks through this level, there's your doji sandwich confirming there's more upside. CTMX, there's your fry pan bottom coming right off the 50. Another one you could be buying on positive trading. Zeus, you could short this one on kind of your bearish doji sandwich setup. You have to watch for snakes. Snow snakes. I don't know. Oracle. You can stay long. However, what do you expect at the breakout level? A breakout. Notice what they did. They sold it off today. If this opens lower tomorrow and you were long, I'd close it out and not pay attention until it breaks up through this level again. The 20-year notes. Is this the long or the short? Just the long. You stay long. Not very exciting, but looks like the bond prices are heading up. Eat a pet buffalo, all right. Merck. Merck is not anything wild and exciting. It's a slow uptrend. If you're long, you just stay long with the, again, your safety stop below the T line. HKD we did. You can still buy this based upon whatever that reaction. I think they're part owner of, what is it, AMCT or vice versa. So what do you want to do on this one? Probably if it opens positive, it's still going to trade positive, and you use your 10-minute chart when you're up that far away from the T line. Moderna, get ready to short this one on a bearish J-hook pattern, failure at the 50. If it opens lower, you got a doji sandwich, making probably the 200 your next likely target. AM. That's not coming up. Is that the right symbol? Now, it might be the right symbol. Sometimes this system just kind of goofs up. I don't know. Sorry, Richard. I don't know why it doesn't come up over here. Texas Instruments. Nothing wildly exciting there. I wouldn't be short. I wouldn't be long. That's just kind of a nothing chart right now. Schlumberger. Kind of the same thing. Really no direction. Probably wouldn't pay attention until this one breaks out through this level. PayPal. Notice what it did right here at the 50. A bearish harami. Telling you the buying has stopped. If you're long and this opens lower tomorrow, close out the position. They're coming back at least to test the T line. BMEO. It's all right. Obviously, you have to wait to see what happens once it gets here to the 50. And NKTR, same thing. That's all right also, because there's your Morningstar best friend up through the T line. You stay long with a safety stop below the T line. AMAT, nothing. Probably wouldn't be long or short. That's just kind of a nothing chart. Oops, I didn't scroll fast enough here. AEHR, stay short until you see a buy signal. You want to be a little bit more prepared for a buy signal if you're down here in the oversold area. But until you see a buy signal, you just stay short. Skechers, that's kind of a nothing chart until they can break out through this level. And Bison, another one, you just stay long. Now remember your doji rule. They're going to move it in the direction of how they open after a doji. So you might want to see this open and trade positive. I'd probably have a safety stop if I was long at yesterday's open. If it comes down through there, they're coming back to test the T line. What happened here? Oh, you get way over there. And RTX. just stay long. Safety stop at the T-line. AUPH we did already, JB. Stay long on this after your best friend breakout. Now you've got a big island reversal. I would suspect your first target is up here at the 200-day moving average. Matador, nothing. If you're short, you can stay short. And CPE, that's really a nothing chart. Would not be long or short. Noble, if you're short, you stay short on this one. Other than that, I'd probably be someplace else. Prague is a margin call. All right. This one's got your fry pan bottom. Kind of broke out through this level with a gap up to that level. I would suspect the 200 is your next likely target. R-I-L-Y. R-I-L-Y. Is that coming up? R-I-L-Y. That one's not coming up. Oh, let's see, did I do it? R-I-L-Y. And that one's not coming up. Costco. Well, nothing's coming up. What have I done wrong here? Oh, what the heck? How did I get way over there? Let's try this again. Yeah, which ones? Costco just stays short. Look at your bearish kicker signal. Never been able to close above the T-line after that. There we go. R-I-L-Y. That one, if I had been long, I would have closed it out today with it closing back below the T-line. Does not show good bullish strength with that close. Unfortunately, that's because of arthritis in my right knee, Stephen. That's right. Sandy's got 15 cars. I just am the caretaker. SIVB, that's not a very rambunctious chart. If you did go long, you want to see it get out through this resistance level. Let's see, I thought we did that. Well, for crying out loud, what am I hitting here? I'm just... Bet stays short, but use yesterday's high as your stop. Oil just stays short. Lulu. You can stay long, but I'd have a safety stop now at the TILA or today's open. If it comes back down through there, there's no energy to it. Gold, is that what we're looking for? ACAG23. What the heck is going on here? I have CAG23. Yeah, so gold is just kind of slowly meandering up. Oh, let's try that one. AMAM.K. No. Try it one more. No, just not coming up over here. Whoops, still need to scroll down. Son of a gun. What is happening? Guess I had to quit drinking this early in the evening. Hood, Hood, I would have closed out today if I was long. Notice how it gapped down back below the previous day's open. That's not a good bullish sign. You close them out right away. Katos, nice fry pan bottom. All you can do is stay long, as long as it stays above the T line. Coke, selling it off, and that's not a very good trader, being that big an institutional trader. But right now I'd be short. Caterpillar, not really going anywhere. I wouldn't be long or short this one. Is that APPL or Apple? Stay short. Why? You can stay long on this one. NIO didn't follow through. And XPEV, you can stay long on this one. Oh, okay, yeah, that's Metastock. Symbol. Shopify, another one that if you had been long and it closed back below the open of the previous day, close it out. That becomes a lousy chart. That's not a very exciting chart, Kathy, until they can break it out through this level. As you can see, it's just not really doing anything of any great enthusiasm. If you're long, you can just stay long. SMH, that's a nothing chart. Probably wouldn't be long or short. And SPG, same scenario. It needed to break out with it gapping down, gapping down and closing below the previous day's open. Tells you there's nothing on that chart that would get you excited. Hood short. You could. If I was shorting it, I'd want to see it trade back below today's low. See if I can make this bigger. Need one candle beyond T-line to stay. Well, you want to see it close above the T-line and then confirm the next day by confirming that signal. UBX, good chart. Stay long. Telephone. And not a very exciting chart, except you've got a scoop pattern set up. So if you're long, stay long. Just definitely want to see it break out through that level. AKRO, that one you can short, especially if it opens lower tomorrow. Giving you a berry stogie sandwich after your kind of your evening star signal. You could short that one. That's probably true, Dan. And T-Mobile, not a very exciting chart. If you had been short, I would have covered the short. I wouldn't go long until at least they can get up through the 50. Lou, I think we did all of those, didn't we? Baba, stay long. Bidu, stay long. And Boeing, stay long. You can see how the T-line is taking that one up consistently. Twillo, nothing yet. You can see what happened once they hit the 50. They sold it off right about in this level. If you were long, again, this is what you want to see once it gets to a resistance level. What type of signal do you have? that indecision, doji, told us exactly what to do today. If it opened lower and traded lower, the doji rule said they're trading it lower, close out the position. We did gold. I don't know what the heck just happened there again. Gold is just waffling slowly up. Okay, so for those of you that want to get a little bit more insights on market timing, look at your Saturday, the 14th, and then we're going to be expanding that for full day training on the 21st, where we're doing market timing and the candlestick patterns that effectively give us a lot more insight as far as what's happening in a market trend, so that now you can apply the correct trading positions, knowing which way the market's going. Texas Instruments. That's not Texas Instruments. Why is this doing this? I don't know what the heck's going on here. Oh, that is Texas Instruments. Another one that as soon as it hit the 50, so if you were long this one and it opened lower, I'd close it out. Robert, yes. Now I don't have the symbols over here, but you trade Forex the same way. I mean, whatever symbols you want to put up. I forget how they do it over here. SPT / JM, JPM. Is this the dollar? How come they won't? Oops, they won't even do it on candles over here. But yes, it works just as effectively. See if I can do this. Access CAD. No, we're crying out loud. SCD access CAD. No, it's not coming up. I'll have to find out what those. On the 21st, we're going to do a full day training, which is taking the market timing and combining them with the analysis of candlestick patterns. So, and I think there's a special that if you pay $47 for the mini training on the 14th, they'll take off $100 for the full day training. Tina, I can do that. I've got it written down. I've been trading. I'll do a real quickie here so we don't fall asleep. I've been short hogs because you can see where the resistance level was. You can see the bearish Harami. So do I think this was going lower today? Pretty much, and that's why I would trade off my 10-minute chart. I'd take some profits, go back short, take some profits, go back short. But I would be trading toward the short side because the daily chart was telling me we're probably heading in this direction. I'm going to write this down. Commodity training. I'll see where we can fit that into the schedule. For non-members, the full day is 297. For members, it's 197. However, if you pay the $47 to do the mini training on the 14th, you get $100 off of those prices. Or our clever marketing technique is, instead of paying $297, join the website for $97 for a month. Get the $197. At least you get a free month or a month of the website. So that way you can take the information you get from the training and see how it's utilized by everybody in the chat rooms. Okay, I guess I've talked your ears off tonight. The market's not going anywhere. But we know the NASDAQ stocks are sortable, and we know the China stocks are, you can trade long. There you go. All right, everybody. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then. Thank you, Jim.